Company K Royal Elite Business Strategy Game Presentation. I am Adam Studier, and I will be presenting the first of two halves of our final presentation over the business strategy game. I will be discussing the company's strategic vision and our competitive strategies used throughout the game. I will also be analyzing trends in annual revenues, earnings per share, return on stockholder equity, and trends in our annual credit rating. I will then allow my managing partner to present trends in annual stock price, company image rating, annual unit sales, and market share trends. He will also be discussing how to craft and execute a winning competitive strategy. Strategic vision. Due to a restructuring of management and Company K being created mid-game, we felt as if our company needed to have an adaptive strategy in order to compete with the already established companies in the industry. We also felt that continuing the strategy used by the previous company would not be effective in the market where they had established themselves. A disappointing performance in year 15 showed us that something needed to be done for Company K to establish themselves and compete effectively in the business strategy game. It would certainly be a challenge to effectively increase production and market share while remaining profitable for our investors. Obviously, our main objectives were to increase our brand visibility by increasing retailer support, overall production, and distribution to all regions in the industry. Another obvious goal of any company would be to maximize shareholders' profits. In order to achieve this, Company K needed to secure untapped markets that were not reached or ignored by other competitors. This led to a focus on technology and constantly increasing productivity, while keeping our costs low in order to keep our wholesale price lower than the industry average. We believed we could increase profits by undercutting competitors in each market. Other parts of our growth strategy included benefits to customers like free shipping as well as competitive shipping times. Constantly increasing investment in retailer support motivated retailers to offer more shelf space for our product, which increased brand awareness as well as revenues and sales each year. Forecasting growth of sales and profit margins in each of the geographic regions allowed us to alter distribution policies to better increase sales and maximize profitability. Our low-cost, low-price growth strategy was our main strength throughout the business strategy game. This required close attention to average prices in the industry for similar products in order to undercut the competitors in all four geographic areas. Next, most wholesale prices were similar except the Latin America market, which offered an operating profit margin up to 15 to 20% larger than that of other regions. Management also decided to steadily increase production to meet growth demand while also increasing wholesale price each year to increase profits while remaining cost competitive in the market. Trends in total revenues. Company K began existence in year 14 of the business strategy game, and with no strategic plan, quickly saw a major drop in performance due to issues like too low of a price point, distribution errors, and poor planning. When management made some restructuring changes in wholesale marketing, distribution, internet marketing, sales slowly began to increase. Our new growth strategy was not rapid, but was seeing positive success over the next few years, with a 17% increase in sales from year 16 to 17, then another 13% increase for year 18. Finally, after a slight dip in year 19, Company K finished somewhat strong and saw its largest grossing year since splitting off in year 14. While Company K saw slow to moderate growth in revenues throughout the business strategy game, earnings per share seemed to be a volatile statistic and were hit quite hard when we saw our slowest years. Earnings per share went as low as $1.10 in year 15 when things were at its worst for investors of Company K. At this point, the only way to go was up. So strategies were implemented and company restructuring was performed to see an increase in profits for our investors. In fact, earnings per share had more than doubled in just 2 years and reached a high of $3.43 by year 19. With a slight drop, we finished at $3.33 at the end of the game. While we were never able to reach investor expectations, which seemed to be based only on expecting more than they expected the previous year, and never dropped until year 20, we did maintain a consistent growth of earnings per share until our final year, which still ended up over 3 times the lowest rate at year 15. Company K's return on stockholder equity saw a similar pattern as that of the earnings per share, but without as much volatility. Our lowest year was once again year 15, but did not hit the rock bottom as the earnings per share graph appeared to depict. However, things got bad enough to lower return of equity Things were bad enough for return of equity to lower under $5, but continued to show a positive trend after our initial drop in performance and topped out at just under $11 for years 18 and 19. Despite the momentum of this upward trend, Company K ended the business strategy game at a $9.30 return on stockholder equity. Unlike earnings per share, stockholder expectations for return on equity remained at a consistent $15. Even though this never increased, we were unable to meet this expectation throughout the business strategy game. Trends in annual credit rating. On a more positive note, our annual credit rating was a statistic where Company K was able to consistently meet our investors' expectations throughout the entire existence in the industry. At the same time, this was another category where investor expectations remained consistent and did not continue to soar way above our company's actual performance. Instead, investors were happy with a B+ rating throughout the business strategy game. Even with the abysmal performance in year 15, Company K's credit rating only dropped to the B+ standard in year 11 before our split and once in the year 15. Company K is proud to have maintained an A+ rating at 3 years in a row, while keeping a solid A in the final year of the business strategy game. This concludes the first portion of Company K's business strategy game presentation. I will now allow my partner to present our remaining performance data for the business strategy game.